Ladies and gentlemen, welcome back to my YouTube channel. Now today I am going to be teaching you how to catch these massive spikes. This was today's trade, USD JPY. I took a buy. Let me show you on the platform. So today we made around 300 rand from that spike. It's a real account, obviously. So I am going to be teaching you how you can profit on those big spikes and how to catch those big spikes. And then this is not news, guys. We are fully technical traders. I took a screenshot of this because I could not make this video at that time. So the time here is 9:53. This was today. So let me prove to you that that was not a news event. We are completely technical traders. So before we get into the content, I just want to show you that that was fully technicals. We are not trading any news whatsoever. So let's open up our investing.com platform and let's check the calendar.
I'm back from paying the rent.
Give it a bit of time. Yeah, guys, so it was news today. Let me make sure everything is okay. There was news at 5, guys, and that setup, it was at 9:53. So this is to show you that that was a fully technical setup. We're not trading news whatsoever. So let's get into the video. Let me show you how to catch those massive spikes. So let me open up the notepad and let us start the lesson. So, how to catch massive spikes? That is our topic or our lesson for today. How to catch massive, or how to catch market spikes. Like you saw there in the beginning, that was a spike that I caught today. So there is a few things you should know before we start with the lesson. As you know, the banks control most of the markets. So let me try and turn my phone landscape if it will allow me. No, it does not allow me. So okay, it's fine. So banks control most of the forex market. That's why I said most, not all. Your banks, your hedge funds, your huge investors with billions of dollars have the buying power to control the forex market. But the most people that have the most influence over the forex market is your banks. So these people are the ones that control most of the movement in the forex market. Your banks. And this can be your enemy. If you choose to make it your enemy, it will be your enemy, but it can also be your best friend in the market. This spike up, guys, this spike up was caused by the bank. So if you choose the banks to be your enemy, you would have placed a sell right here, and you would have obviously blew your account or made an incredible loss. So that is if you want banks to not be your friend. But if you want banks to be your friend, you can move with the bank. The bank moves with these massive spikes. So when you see this, you know that it is a bank that caused this move. Now, if you want to move with the banks, this is what you need to know, guys. So that spike was caused by market manipulation. If you saw in my previous videos, if you haven't seen that, I recommend you go back and watch. We have our zones, okay, our higher time frame zones. You have your zones, and then let me plot out the zones. So if you're confused on zones and market structure, I have videos covering all these things. Just go back, watch my full course, and then come back here. So you have your zones. So now what the market makers do, your bank, the banks are the market makers. So what they do when they have reached a zone, so here is your zone, what the banks will do is they will create, remember guys, this is a higher time frame. So if you're, again guys, I need to emphasize this, if you're confused, go back to my previous videos and watch them, because I don't want you to be losing your hard-earned money because of a lack of understanding. So in the higher time frame, we have our zone here. So obviously we are looking to buy because we ride the trend. Now on the lower time frame, what the banks will do, they will create a range. So let me show it to you. So that is the higher time frame, and guys, this didn't happen yet. This right here, it didn't happen yet. So you must imagine, for the sake of this example, this has not happened yet. Let me erase it for you. So we are still here by the zone. The up move has not happened yet. So this is what you do. The up move has not happened yet. So what you will do, you will go to the lower time frame. Let me go back for you. You have your lower time frame, and we are back to that zone but on a lower time frame. Let me draw it for you. So this is that zone on a lower time frame. Then you have your zone over here. So guys, this is exactly what the market makers will do. You have that zone on the lower time frame. Now this is what the market makers will do. In that zone, they will create a ranging market. They will create a ranging market, guys, which will look something like this. They will create within that zone something like this, and then they will cause the price to push below the zone and then to come back up, and then it's going to cause that huge spike to the upside. Now this here is where the banks get their money, because you must remember guys, in forex you are simply taking money from one person's pocket and putting it into your own pocket. So the banks profit when you make a loss, the brokers profit when you make a loss. So what the banks are doing is they push price below here, because now there are sell limits here. There are people with buy orders here, they put their stop loss here. So right below that zone there is billions of dollars, guys, billions of dollars, because you have your sell limits for those breakout traders that are looking to sell when the price breaks below the zone, and there are your stop losses for the people that bought here. And there are also those traders that execute market executions immediately the price breaks. So there is billions of dollars here, guys. Right here under this zone there is billions of dollars. And what the banks need, if they want to buy an asset, they need sellers to sell it off. That's how they make profit. If they want to sell an asset, they need buyers to buy it off. So now they are trying to trick you into selling the market, even though they know that they want to buy it. So when you sell, when you take, let me show it to you here. So here is the consolidation we're talking about, the range here. The price kept going up, down, and then there is the break I was telling you guys about. So here, right here, guys, there is billions of dollars because the banks were trying to trick the retail traders, and most of them fell into this trap, and then they push the market higher and higher and higher. This situation happens on a consistent basis, guys. So what you need to do is, on the higher time frame, let's go back to our higher time frame. So on the higher time frame, we had our setup. Let me erase all this for you. You remember our setup, guys? We had that buy opportunity. Let me draw it for you guys again. We had this was what was happening on the higher time frame. I just showed you what was happening on the lower time frame. So we had this setup where on the higher time frame, this was the current situation. So on the higher time frame, when you see this, guys, when you see the price breaks and then retest, we are looking for a buy here. But as I showed in the lower time frame, they will try and trick you to sell. But once you see that, guys, once you see this, if the higher time frame is giving you a buy signal, and once you see, number one, a ranging market, let me write it down for you. Once you see ranging, identify so guys, identify your ranging markets, or identify your consolidating markets. Ranging market, consolidating market, same thing. So identify your consolidating or ranging market. I'll explain it for you again if you forgot what a ranging market is. So a ranging market is basically equal highs and equal lows. Basically, guys, equal highs and equal lows. So identify this, and then once you're done identifying your ranging market, you must identify the break. A break will look something like this. You must identify a break, guys. Here is the break. So that's the second thing that you need to identify when you're looking to catch the market spikes. So number one was identify your consolidating markets. Obviously, guys, you will do this step or this process after you found the higher time frame direction. So this is a confirmation. This will tell you that a spike is coming. And then number two will be identify the break. This is the break that I was talking about. And then this can serve as another confirmation, guys. This can serve as another confirmation. This break tells you that they are ready to make the market to buy, but they need sellers first. So this break will indicate to you that this market is definitely going to buy. And then you enter your positions, and then you can catch these massive spikes. And then the same is true for the opposite side of it, guys. If a bank is looking to sell the market, this is what they're going to do. You have your downtrend, and then the market is currently here. You have your zone, and then right here in this zone, this is the higher time frame. So when we go lower, and look deeper into this zone, this is what you will see, guys. This is what you'll see. This will be your lower time frame, and then we have that zone we identified on the higher time frame, and then they will create a range. In this range they are collecting the money, so you will see something like this, guys. And then yeah, and then push down like no one's business. So that is it, guys. That is it. The same is true for the opposite side. So that is all you need to do to identify and catch those big spikes. Number one, identify your consolidating markets, and number two, identify the break. You can use this to confirm your higher time frame hypothesis, or you can use it to confirm what you think the higher time frame is gonna do. That is it, guys. Make sure you like and subscribe and do the hard work, especially when you don't feel like it.